78 to 82% of the time, this strategy works based on multi-year regular trading hours sessions. What's up, traders? Zach here from the Trading Network, and I hope you all are doing well. Today, we are going to talk about one of my favorite market profile strategies that has been working for decades, longer than I've been alive, that has an incredibly high hit rate between 70 and 80% if all of the parameters are met. That is the 80% value rule. The 80% value rule is very simple. If a market opens outside of the prior day's value area and re-enters it and closes 2 TPO prints back inside of the value area, there is an 80% chance that we see a move from the value area low to the value area high, or from the value area high to the value area low for a full rotation. What we are going to do in this video is I'm going to show you an example of how this works and how you guys can take advantage of it when utilizing market profile. This is a strategy that, once again, has quite literally been working since longer than I have been alive, and it will continue to work for as long as markets exist, because auction theory and trading psychology does not change. This one rule is very simple to understand. It is easy to spot and has an 80% probability of success, yet most traders have no idea it exists, they miss it, or they mismanage it. Today, I'm going to give you a very clear example, especially using the Trading Network techniques in combination with market profile analysis, how you guys can take advantage of this very high probability setup the next time you see it take place in the markets. Now, we are going to be looking at an example in NQ, but there are plenty of stats that you guys can go and research for yourself that show that this works for NQ, ES, gold, oil, and a lot more assets and instruments. We have data that shows from Market Delta specifically that 78 to 82% of the time, this strategy works based on multi-year regular trading hours sessions. That is right. You can go back and you can backtest this strategy for years, quite literally decades at a time. Shadow Trader has backtested it. Market Delta has backtested it. There are user backtests on futures.io, and there is a ton of data out there that supports the 80% value rule being incredibly high probability, working time and time again. So I'm going to show you guys here on the charts how this strategy works. Now, of course, you need, in order to trade this strategy, you need a market profile, or you need something like my market map indicator. Market map is an indicator that simply plots market profile levels on the chart, as you can see here, that mimics the actual market profile itself that I have here on the right-hand side of the chart. Now, what we are going to be looking at in particular is the session data from April 30th. Now, when we are using this value area strategy and market profile in general, really, we are looking at the current opening the next day in comparison to our previous regular trading hours profile. So for those of you guys who are new to market profile or unfamiliar with how I have my profile set up, these pink profiles here represent the New York trading hours session. So that is between 9:30 a.m. and 5 p.m. Eastern time. And these blue profiles are the overnight session, or the extended trading hours session, as they are also referred to. Okay. So in this example, we see that we have the New York session here from April 29th, right? We have a high on this day of 19,688. We have a low on this day of 19,403.75. And the subsequent day, we have the market opening with a gap to the downside. All right, so I'm going to zoom in here, and I will temporarily hide the drawings here. And you can see that we have the opening print on the profile notated by this O period right here. Opening print is notated by O on the NinjaTrader market profile. So we opened right around 19.3K on this day. I'll bring the drawings back so we can see where that is on the chart. And you can see on the left-hand side over here, I have the 377 tick chart, which is my trigger chart. Every single one of my entries with any trade that I take is on the 377 tick chart. I also use 987 for confluence. But this is my bread and butter here. Once again, for those of you guys not familiar with how I trade and the Trading Network strategies and techniques. Now, let's get back to the open on the 30th. And you guys can follow along even if you don't have a market profile. Go back, pull up the trading data from the 30th. You'll see that we opened right about 19.3K. And when we open below, an entire prior New York session, that is a gap down, right? So we opened gap down on the 30th, around 19.3K. And then we proceeded to basically open up and sell off, as you can see here on the regular tick chart on the left-hand side here. So we opened up here where this dashed line is. We kind of put in a double top, sold off for a little bit, and then price regained the opening range, which is the indicator that I have here. This notates the 1 minute opening range. And we started to base off of this prior resistance, okay? Now, as you can see, price started to work its way back up and into the prior day's value area. I will mark off the prior day's value area right here, but you can see it is also notated with the market map indicator. The value area low for the 29th regular trading hour session is right around 19,480, okay? Now, the 80% value area rule states that when we open below a value area, we don't have to open with a gap, but as long as we open below or above the prior value area, outside of the value area, if you will, and we move back inside of it and we get accepted back inside prior value, that is when this strategy can be used, okay? So as you can see, price initially rejected value, and then we have a very clean support and resistance flip here. And for those of you guys not familiar with market profile or TPO, TPO stands for time, price, opportunity. And each one of these blocks or letters on the profile represents one 30-minute period of price action, okay? So the rule is, and I have kind of altered this because I sometimes like to be a little bit more aggressive with this strategy, but essentially, if you want to play it by the book, if we can move back inside a prior value area and close two 30-minute bars, that signifies acceptance, okay? So you can see here, once we broke back into the value area at 11:34 my time, we then spent 2 hours above the value area. Time equals acceptance based on market auction theory. If you guys want to learn more about market auction theory, I would highly suggest reading the book Mind Over Markets by James Dalton, as well as Markets in Profile. Those are incredible books, and they have changed my trading, and they have changed my life. So make a note of that, and if you guys really want to dig into the profile and understand the inner workings of market auction theory, strategies that have quite literally been working for decades, once again, longer than I've even been alive, check out those books. So what we did is we got accepted back into prior value. We opened far below prior value, price moved back up into value, and once again, if you guys are not familiar with what the value area is, that is where 70% of trading activity or price action took place in any given session. So I'll just zoom out here and give you guys an example. So the value area was 19,632, value area high, value area low, 19,483. So on the session of April 29th, 70% of the trading activity took place between 19,482 and 19,632. Price being in value equals a fair value for the instrument. This generally means that large players are viewing that area as a fair price to do business, okay? So we got accepted and price held back inside value for 2 hours, right? That's double the time that we need. We only really need two 30-minute bars to close back inside of the value area for this strategy to work or to be activated, okay? So how you can take advantage of this strategy and use the 80% value rule is you look for the market to open outside of value, okay? And then you look for re-acceptance back inside value, which looks like this on a regular candlestick chart, or looks like this on a market profile chart, where price opens below value and then trades back inside of the prior value and holds there for a specific amount of time, right? Once again, time equals acceptance. I cannot stress this enough. Acceptance does not mean price moves back above value and then immediately rejects it and starts trading below value. You want to see buyers hold that level, and you can very, very clearly here see a support resistance flip. Yeah, we dipped back below value a little bit, but generally speaking, this is also a point of control. This ended up being the point of control from the 30th as well. So that is further indication that that is a very important area, that large players are interested in doing business in this area. And on this day, buyers accepted price back into prior value. Okay. So if you are using my tools, if you are using my strategies, you can look for, first and foremost, acceptance back into value, regardless of what tools or strategy you're using. You need acceptance back into value. All right. So let's just see here. We moved back into value at 1134. So technically, by 1234, that is acceptance. All right. And utilizing something like a 377 tick chart, this could be quite an acceptable entry. We have bullish divergence here, right? On the stochastics, we have it on the PMARP as well. We even have divergence on Delta. So, I mean, that's incredible. A lot of factors here, a lot of technical check boxes, cherry on top. My entry trigger is a local low, which is a bullish candle closing above the top of the prior bar. So our local low would be right here on this bar, because this bullish candle clearly closes above the top of this one. Top of this bar is here. I'll zoom in right here so you guys can really see what I'm talking about. All right. This candle closed right here above the top of here. So that is my trigger. That also confirms the bullish divergence. Then we have a subsequent higher low with a very strong bullish candle that closes above the top of this. So this could even be your entry. And then you can decide whether to put your stop loss right there, or you can decide whether to put your stop loss below that low of the divergence, which is where I would opt to do it because that offers the most protection. Okay. Then what we have is the ability to sit and wait for a value area rotation. Value area rotation is when price enters the value area, whether it's from the top or the bottom, and then moves to the other side of value. And that is exactly what we got on this day. And you can see how incredibly clean this move was. Once we put in this bullish divergence, yeah, price chopped around for a little bit, but we never broke the low of the divergence, which is or would be our technical invalidation point for this setup. Okay. And then, you know, if you were, let's say you were late and you didn't catch this one, you could enter here with a stop loss below here. You could enter here with a stop loss below here or here. And you could also enter here. There's another local low, oscillators curling and crossing up, PMARP crossing the signal line to the upside, Delta going back positive. You guys can clearly see the pattern here. And I will say, if you'd like to learn more about these strategies and how I use these tools in combination with Market Profile, feel free to check out the Pro Trader bundle on thetradingnetwork.io. But this is one of the most powerful strategies that cannot be discredited. You cannot dispute how high probability and how well the 80% value rule works. I'm only going to show you guys one example in this video, but I would strongly urge you, especially if you have Market Profile or if you have Market Map, to go back and backtest this. You will see that it quite literally works 70 to 80% of the time, and it is one of my favorite strategies. One of my other favorite strategies is pretty similar. It is the initial balance extension, or we call it the IBX, and it's similar where the initial balance prints, which is the opening 1 hour range, and then we get acceptance either above the initial balance high or rejection below the initial balance low after it closes. And once we get that confirmation of multiple TPO prints either above the IB high or below the IB low, you can then do the same thing and trade with your risk managed on that level. So this trade would be invalidated if we start to move back below the value area low and, you know, close a 30-minute bar back below, or close multiple 2 30-minute bars in a row back below the value area. That would be something to look out for and would be a signal that this strategy is not working in that particular moment. So just to show you exactly how this works, the initial balance high from that 29th session is 19,632, as we discussed, right? So we get the initial move back into value, right? We get the support resistance flip, as you can see here. We've notated by the arrows. Price spends time accepting above or back into value. It puts in some final lows, another higher low, starts to break these swing highs, and then we just get an absolute rip to the upside. directly to that value area high from the prior day, 19,632. This is the other dashed line. You can see it right there. And you can also see it from market map up here. Value area is right there. And then price starts to base off of the value area high and continue to the upside. So not only in a lot of cases can you take a trade from value area low to value area high, and in this case, you know, if you would have entered here, it would have taken a little bit to play out, you know, an hour or so. If you entered here at 1:37 my time, you are at the value area high and you get that full value area rotation in less than 20 minutes, which is pretty insane. That is, just to be clear here, that is a move from 19,485 to 19,635, which is 148 points in a matter of 13 minutes. That's pretty impressive, right? It's not always going to work that quickly, but if you can trust this edge, if you can utilize this system, it is incredibly high probability. And I would once again highly suggest you guys look deeper into this strategy itself, as well as strategies like the initial balance extension, because they are proven edges that have been used by traders for years, decades, and they will keep working because the market is a well-oiled machine based on market auction theory and human psychology, and that is why this works. So what I like to see is a clear base back inside value. This is exactly what I mean, a clear base. And if we go to the, let's just go to the 987 tick chart real quick, and I'll show you what it looks like on a slightly higher tick chart, right? It is, I mean, clear as day, right? Clear resistance, price moves up, flips that prior resistance to support, support accepted, support accepted, support accepted. Yeah, it chopped around for a little bit, but that structure is so clean, and this is how you will see it most days. It'll almost be so clean that you second guess it. You're like, is it really this simple? Is it really this easy? The answer is yes. It really is. You just have to trust yourself and trust your edge, regardless of what strategy you're trading. But if you can lock this in and add the 80% value rule to your playbook, I promise you that it will make you a better trader, a more confident trader, and very likely a more profitable trader as well, because market profile truly is the guide. It is the market map. That's why I called this indicator market map, because market profile maps out the levels that we need to pay attention to take high probability setups and understand how the market is moving, understand where liquidity is, understand where large players are looking to take their trades, stop out retail traders, and absorb liquidity for the next move. And you can see here, once again, price opened up, moved down, put in a low, bullish divergence, traded back up through the opening range, even a support resistance slip here as well, which is our first signal that buyers are taking control. We have an open rejection reverse to the upside, which is a market profile auction type. It is a higher probability market profile auction type that tells us that directional conviction is likely. The highest probability market profile open types, and you could consider this an open test drive as well, because the test of the downside was pretty quick. You know, we had that initial test at 8 a.m. my time, which is 30 minutes after the open, and by, let's see, 8:30, we were back above the opening range and using that prior resistance as support. So I think there's a good case to call this an open test drive, where we open, we test, and then we drive to the upside, and then we get that acceptance back in value, which is incredible because it's a very high probability setup that we can take advantage of time and time again. Now, what I will say is that if you see a situation where the market opens below value and then we move back into value and price starts to chop around, do not get married to this trade idea. If we start to reject value and start to break like these swing lows, these are very important. If we started to break these swing lows here and go back below S1, back below the, you know, prior initial balance low, that would be a signal. I mean, your stop loss should be a lot tighter than that in general, but that should be a signal that this is probably one of those 20 to 30% times where the value area, the 80% value area rule is not going to work, okay? But what you can do is you can backtest this over and over again. Don't take my word for it. Go collect the data yourself, and you will see how high probability these market profile setups truly are. So I want to be clear here that the key to taking advantage of this strategy is not spotting the setup. It is contextual awareness. So for example, on strong trend days, this strategy can fail. When we have strong news catalysts, this strategy cannot work as well too. If we have low volume re-entry or fake acceptance, right? So you can see here, when we first moved above, you have a spike in delta, and then we have negative delta, right? But price still, generally speaking, holding value, right? That is a sign. That is not fake acceptance. That is true acceptance, which means all of this selling is getting absorbed at the value area low, and buyers are now stepping in where sellers were stepping in previously, okay? This is responsive buying. Buyers are responding to the value area low. Buyers are supposed to get long around value area low. Sellers are supposed to get short around value area high, okay? I'm not going to dive into responsive and initiative selling and buying too much here, but generally speaking, responsive buying is buyers responding to low prices. So value area low, prior range low, overnight low, etc. Responsive selling is sellers responding to high prices, selling at value area high, prior range high, overnight high. Okay, so I will leave you guys with that. And if price opens near, a prior point of control and it gets choppy, that is something to be aware of as well. But here you can see that buyers start defending the prior value area low and that current day POC pretty much every time it comes down and tests that. And we have delta to support that. You can see that delta kind of fell off here. And then as soon as we started to take off, buyers stepped in and sellers were nowhere to be found here on the Delta Pulse, all right? This is also an indicator that I sell in addition to Market Map, and if you guys want more information, you can find access to these indicators on thetradingnetwork.io, and I will also put a link in the description below if you guys want to take advantage of Market Map. It is a very powerful tool, and to be honest, it's a lot cheaper. Market Profile with NinjaTrader is about $1,000. Market Map is less than half of that. So if you guys want to get your profile levels on chart without spending $1,000 for the NinjaTrader profile, use Market Map and it will go a very long way. I can certainly promise you that. So the idea, just to kind of recap, behind this strategy is a mean reversion trade in a value-based auction, okay? What that means in English is that price is reverting to the mean. The point of control is the mean of any session. That is the one price where the most trading activity took place. So if price is extended, if we open below the prior range, if we open below value, or both, that is, or this play is a mean reversion where price is extended, right? And it is reverting back to the mean. And in this case, we got a lot more extension past that value area high of, about 250 points up to 19,880. So not only in certain cases can you take a full value area rotation trade, which is a lot to take, you can get extension above that if, the market continues to go. And you can see how clean this is. And this is why I started to use market profile level. If you guys are watching this video and you are still drawing your own support and resistance, and you do not have automated tools like market profile, market map, VWAP, fib pivots that give you clearly mathematically calculated levels to trade from, you are doing yourself a disservice. Stop plotting your own support and resistance. Use tools that tell you where the prior highs and lows are, where the POCs are, where the value area levels are, where the initial balance is. That will give you confidence in your edge and in your setups. If you're making your own support and resistance levels, you better trust the levels that you're creating. If you have them automatically plotted for you, there is no second guessing because you know the levels are what they are. It's as simple as that, okay? Patience and confirmation are critical when using the 80% value rule. This is a strategy that aligns with the market seeking efficiency after imbalance, okay? When we open with a gap, the market is imbalanced. The market is, once again, a well-oiled machine, and it seeks balance, it seeks fair value, and it seeks to become more efficient if it is in an inefficient state, which is out of balance, all right? Price is like a rubber band. It can only be so extended before it retracts and reverse back to the mean when we are talking about price action itself. So every single day, I'm using market profile levels. I'm using the market profile on the right side. I'm using market map on the left side to create my bias. I am using this and the market profile open types and market profile strategies like the 80% value rule to give me an edge every day in the market, whether it's the 80% value rule, whether it's the IB extension, or other market profile setups that I will show you guys possibly in other videos. These strategies are powerful and they will continue to work for a very long time. And as long as you can know what to look for and trust yourself and trust your edge, you will very likely find a lot of benefit in trading these strategies. So if you guys want to learn more about, once again, these tools that I'm using to help me get even higher probability or increase my edge even further when trading these strategies, check out the Pro Trader bundle at thetradingnetwork.io. I will drop a link in the description as well, so you can check out the indicators, you can check out market map, you can check out the delta indicator, etc. And if you guys have any questions about the 80% value rule, if you have any questions about market profile, drop them in the comments below. Shoot me a message on Instagram, shoot me an email, shoot me a message on Discord, and I would be happy to help. This is powerful. So if you guys are finding value in these kind of videos, if you guys want me to make more of these kind of videos where I quite literally give you strategies that you can use the very next day for free, you don't need my indicators. They will help, but you don't need them. You could quite literally just use the market profile levels. Market map will help as well, but you don't need that either. You just need to understand where the value area is from the prior day. You need to see where we are opening in relation to that prior value area, and then you can take advantage of this strategy. Regardless, if you want to see more of this content, if you find value in it, drop a comment down below and tell me how you are utilizing market profile, how you would like to utilize market profile, and what you would like to see me show you guys in the future videos about market profile strategies, and auction theory. I greatly appreciate every single one of you taking the time to watch this content. If you find value in it, please make sure to like, subscribe, and click that bell notification to be notified every single time we post videos here on the Trading Network channel. And I hope you guys take this strategy, use it tomorrow, the next day, and for years down the line. As always, trade safe, and I will see you in the next one. Cheers.